So today on Toni Talks, I'm going to be joined by attorney Eliot Thomas and our bookkeeping manager, Troy Butler. We're going to be talking about the importance of keeping good books and records. We're going to look at what exactly we mean by books and records. We're going to look at financials, meeting minutes, and when those types of documents and more come into play. So let's just get into it. Okay, so today I wanted to talk about the importance of keeping good books and records. And that's something that we're actually seeing in this climate come up as a very important topic, especially when you're dealing with trying to source funding from lenders and things like that. It is so important to have proper books and records for a multitude of reasons. But what do we even mean when we say books and records?
Yeah, so it's not all just bookkeeping. While bookkeeping is very important, it's not just bookkeeping. You also have to keep good corporate meeting records, but really you do have to keep books. It's a requirement of having an entity. Mm-hmm. Without it, you can pierce your corporate veil, you can lose your asset protection status, and it's just not a good idea to not have books.
Well, let's go back a little bit to the meeting minutes. Mm-hmm. How often do I need to keep meeting minutes, do meeting minutes?
Right. It's a requirement for a corporation, mm-hmm. if I'm not mistaken, that they have to have at least one meeting a year, correct?
Yes.
Okay. And then we recommend that you do monthly meetings, mm-hmm. right? So, you should always be keeping meeting minutes, talking about who was there, what you talked about, so on and so forth. And
when I think about meeting minutes, and I have clients who ask me all the time, look, hey, I haven't been keeping meeting minutes. Look, you had meetings. I guarantee you had meetings. But what you need to do now is you need to go and document and basically memorialize those decisions that you were making throughout time, right?
Correct, yes. And along with what Troy was saying, I think, yes, we always recommend the monthly meeting, but remember, it's really for any significant event as well that might come up besides just your regular monthly thing. And if nothing significant comes up, well, at least you need to have that monthly meeting to say nothing so special came up, but it shows that you're taking control of the corporation, you're doing all the documentation and so on and so forth.
Now, what kind of give me some examples, if you can, of what kind of significant events would require or would.
Sure. Absolutely. If you're going to bring in, remember that it's the shareholders that control who's going to be on the board of directors. Board of directors take care of who the officers are. So if you're going to change a director, you're going to need to have a shareholders meeting to vote in a new director, nominate, and that director not only has to be elected in, but they have to accept that position as well. And we have that documentation in our Anderson binders, typically, and if not, just reach out to us and we can get that to you. But also, if it's a board of directors meeting, well, you might be changing the officers, a new president, new secretary, something like that. So you'd want to document that. If you're getting into a significant deal with a potential, perhaps buying a new house, something that would have a lot of impact on the financials, which would need good bookkeeping. We want to make sure we have that in a meeting as well.
So we're saying that we should have shareholders meetings to elect directors, right?
Correct.
And then we're having directors meetings to basically manage the day-to-day operations.
Well, the directors will bring in the officers. Mm-hmm. They determine the officers, and then your directors are kind of the generals that come up with a battle plan. Officers carry it out. Shareholders are the ones that kind of, I guess, the voters. And that's correct. Yeah,
that's a lot of checks and balances there.
Exactly.
Mm-hmm. Mm-hmm. So you'll have and we're talking about corporations right now.
Correct.
So you're having your annual shareholders meeting, your annual directors meeting. You're making resolutions. And when you open your corporation, the first meeting is already, well, at least if you've set your corporation up with Anderson, the first meeting has been held for you, in a sense, to set up the corporation. That's your organizational meeting, and that's setting forth your initial resolutions, that's putting out there those basic things, opening a bank account, having a medical reimbursement plan, an accountable plan so you can reimburse yourself for out-of-pocket expenses and things like that. So that one's actually already done for you in the beginning. And then going forward, you are going to have quarterly meetings, or at least you should have quarterly meetings, if not monthly. Because again, what you're doing now is you're just documenting and memorializing the decisions you've made, big or small.
And along that line, I think one of the biggest fallacies that we run into, and the partners stress this a lot, especially our partner Michael Bowman, when you look online about, well, what kind of, why would I want to have an LLC, a limited liability company, which, if you may know, can be taxed as a corporation as well, SRC. But you look on a lot of the websites and they'll say, well, it's kind of nice because you don't have to have all the formalities, not as many meetings and things like that. Well, that's probably the biggest mistake you can make, because it's those meetings that are going to help protect you if anything ever goes wrong. You're going to show that you made those business decisions and now you have the documentation for it. So our partners are constantly having to go out there, and Carl, when he goes out in instructional implementation in these events, to remind our clients that every business needs to have that meeting.
Right. And here's the thing. When I think of a shareholder meeting, I think of a bunch of old dudes sitting around in suits smoking cigars, right? No, it can be, if me and Toni are partners in a corporation or shareholders in a corporation or directors, it could be us just talking like this. It's not something super formal.
Yep.
You just have to make notes of what was discussed and the resolutions that we came to. Absolutely.
And you don't need multiple parties to have a meeting or to document meeting minutes. You can hold all offices in the corporation yourself. You can be the shareholder and the director. Again, because it's just about documenting those decisions that you're making along the way. So you're going through the corporate formalities and making sure you're treating your business as a business. And to your point, Eliot, I agree 100% with Anderson's policy on that is you need to make your business look like a business, even if you're dealing with an LLC, which is not required to have meeting minutes. You should still. However, if you have a structure that has maybe a corporation as the manager of that LLC, then the corporation will be holding the meetings to make decisions on behalf of that LLC. Just need to make sure you're documenting that LLC in your meeting minutes when you're making those decisions.
Correct. Absolutely.
So another point that you made, Troy, when we talk about books and records is books.
Right.
So what are books?
So again, like when you think about books, you think of a big general ledger and lots of scary and hard to do bookkeeping. It doesn't need to be something that's super complicated. You don't necessarily have to have QuickBooks. An Excel spreadsheet works just fine. As long as you're keeping track of the income, the expenses, your assets, your liabilities, it's totally fine.
Well, you got ahead of yourself a little bit there. You said general ledger,
right.
And I want to make sure everybody understands what that is. What's a general ledger?
A general ledger is a tracking of all your transactions for the company, and it keeps track of everything. In the old school days, it was a big binder essentially with everything.
You say that, I've seen those.
Right. So like I said, it doesn't have to be some grand formalized thing where you're spending tens of thousands of dollars on a bookkeeper every year. You can use an Excel sheet, but what you can't do is just have a box of receipts. That is not bookkeeping.
As a tax professional, when I am going in to prepare a client's tax return, I cannot tell you how much easier it is to sit down with a set of financials that has your profit and loss statement, your balance sheet, and then the general ledger for me to go in and source what the specific line items were that make up that final expense item on the profit and loss statement. Troy, why don't you talk a little bit about what a profit and loss statement kind of should look like?
Sure. Well, profit and loss statement, for anyone who doesn't know, its name is what it is. It shows the profit and the loss of the company. It lists out your income and all your expenses there below. It's one of the three most important financial statements like you were discussing. It's what a bank would want to see. It's what you need to do your tax return. So yeah, it's your income statement is another word for it. It shows your income and your gross revenues and your gross profit and your total expenses.
Right. So that is what a lot of, that and the balance sheet, to be fair, is what a lot of banks, and I keep going back to this because this is the climate we're in right now, is what a lot of banks will be looking for, or financial institutions will be looking for when they're looking to grant you any type of line of credit or funding, is they're looking for your P&L and they're looking for your balance sheet. The P&L is kind of showing what your activity looked like for that year, and what your gross revenues were and your net profits were, and then your balance sheet is kind of showing if your assets and your liabilities, how strong is your portfolio in that kind of respect, right?
Correct. And another thing, we talk about how it can benefit on the tax preparation, no question about it. Makes it a lot easier, means it's a lot faster, means it saves you money on your tax preparation. But remember, these are the numbers of your operating business that can always be used for your own benefit to help manage your business. You see now where your money's going, or where it should be going, and what to expect. It helps forecast. That's why every major business has these, and they're so very important.
Yeah. I can't tell you how many times I've been working on a tax return and I get it done and I tell the client, hey, you made X amount, $10,000 at the end of the year. I only have a couple $100s in the bank account. How's that possible? That's not a good way to track where you're at, is how much money you have in the bank account.
Absolutely. Yeah. And that's another point too, when we talk about books and records, is tax returns. You need to have tax returns on file. One, it is a requirement for a taxpayer to pay their taxes. And sometimes you do yourself a disservice if maybe you're due a refund, or you had a tax liability due that was possibly insignificant, but now that you've waited so long to file those tax returns, you have penalties and interest that made it a more substantial burden on the business. But not only that, tax returns are showing that you are treating this as a business. You're treating this as a separate person from you. You're not commingling your activities personally with your business activities, because you are filing a separate tax return. You have a separate set of books that you're using to prepare and report those taxes to the IRS. Eliot?
Correct. Yes. The more that you're showing in your bookkeeping, it helps you. A good point that Toni brought up was the commingling of funds. So you know that your personal funds aren't being mixed with corporate funds. Shows less chance of impropriety if you ever got brought into court, or if you're going under an audit with the IRS.
Right, but that doesn't necessarily mean you can't cover an expense for a corporation or vice versa. There's ways to account for that in bookkeeping. For a corporation, you would use your loans from shareholder account. So it doesn't mean that if you do it once that you're going to blow through your corporate veil. It just means you can't make it a consistent thing that you're doing.
Well, let's talk about that. So if you are, because you can, as an officer of the corporation, shareholder, director, you can actually pay for expenses on behalf of the corporation out of pocket, but you have to do it properly. Make sure you, track that paper trail, right? So you have to make sure that you have an expense reimbursement report that you're providing to the corporation to reimburse you for those expenses out of pocket. And if the corporation is not yet solvent, then it goes to Troy's point, and we're going to add that amount to your shareholder loan, which you need to have a promissory note on file for, and make sure that you're at least updating that promissory note every year to supersede the prior year's promissory note. If not, what we like to do at Anderson is have a revolving line of credit. So you don't have to keep updating that promissory note unless, of course, you go over the amount allowable in the revolving line of credit. We usually do a $150,000 revolving line of credit with a promissory note attached to that revolving line of credit when we set up the corporation. What's the usual timeline that you need to have those expense reimbursement reports in?
The IRS likes to see it on a relatively consistent basis. I believe it's every 60 days, but we say every 30 days. I tell clients to try and get in the practice of doing it every month. Because again, that helps them keep regulated on what's going on in that particular month. It's a month is just a very nice breakdown for what's going on financially.
Right. What you don't want to do is have one big lump sum at the end of the year that you're paying out.
Which may happen the first year as you're trying to get. It takes time to get up and running with your business. We understand that learning these new tactics and procedures takes time. So don't panic if you haven't done it. But going forward, we do want to get into these practices and have good methods of how we run our business.
Well, let's talk a little bit about receipts, because I get the question very often, well, I can't find my receipt. What do I do? Can I deduct the expense if I'm unable to produce a receipt?
You can always deduct it, but will you be able to back it up with the IRS? And I think along that question, you get often, well, I've heard that something that I don't have to keep receipts if they're under $75 is also a popular question, which is the IRS does make comment to that, but you need to be able to always document. And so at the very least, if you don't have the receipts, at least have the bank statements, but know that the IRS doesn't have to necessarily accept those if it doesn't tell enough detailed information for them. So scanning receipts is always a good idea, and I would keep every receipt, even if it is under $75, whether you're required to or not, because if you go to audit, how are you going to defend yourself?
Yeah, it's my saying, or I didn't come up with it, but if you can't prove it, you can't deduct it. That's kind of how I feel about it. And you should always be able to prove it via bank statement, especially if you're using cash, you have to keep the receipt.
What I usually say is, look, let's make sure you either have your receipt, invoice, bank statement, credit card statement, something like that. Now, bank statements and credit card statements are not foolproof, because let's say you're fixing and flipping a property, you go to Lowe's, you spend, $60 on personal items, but then you buy a hammer for $10. I don't know how much a hammer costs for $10. Do hammers cost $10? I don't know. But now you have a line item on your credit card statement for $70. You can't take that credit card statement and, break out exactly what was spent on what. So, if it is a corporate credit card, you're going to have an easier time with that, because that is just supposed to be for business. But if you're paying out of pocket and you're providing an expense reimbursement report, best practice is to have a receipt itemizing the items that were purchased. But in a pinch, yes, you can use a bank statement or a credit card statement. And it's best that if you are taking a line item out of that bank statement or credit card statement, that the expense was 100% for business, at least for that line item, is what I would say.
Correct.
But you want to make sure you are filling out that expense reimbursement report and just having those sorts of things on file. It just shows that you're treating the business as a business and you're taking this seriously, to have proper books and records. Why do you need financials? I know we talked about lenders and making sure you look like an appropriate business, but where would financials also come into play?
So recently, we've been dealing with the CARES Act a whole lot.
Mm-hmm.
I can't tell you how many clients didn't have financials, so they couldn't get the funds needed for a PPP loan or paycheck protection program or an EIDL, because they have no idea where they stand. It also allows you to do tax planning. If you have financials, you can say, this is where I'm at. There's no surprises on tax day that you're going to have a bill for X amount of dollars, or you need to, buy some assets that you can depreciate to lower your tax bill at the end of the year. So these things are all important.
I mean, that is an excellent example. I know we kind of talked about it a little bit, but let's kind of go there, because the point that with the CARES Act and the Paycheck Protection Program, financials came into play a big deal. But not even just financials. It's the whole gamut of books and records. They were looking for things such as your 2019 tax return, if they were looking for your 941, so your payroll reports, your 944, they were looking for your Schedule C specifically on the tax return. If you were reporting as a sole proprietor, what were some of the other?
They're looking for bank statements, corporate bank statements if you are a corporation, copies of checks or voided checks. And different banks had different things that they were asking for. Some were asking for articles of incorporation, state letters of good standing with the state. So again, it all goes back to you have to keep good records.
Yeah, absolutely. Another reason why I can see you would want to make sure you have good financials is because if your tax return is coming under audit.
Correct. Yeah. If you're going to be under audit, you have to be able to back these things up. And that's always going to start with the bookkeeping. Is always going to be the bedrock where everything on your return is built. And so the better the books are, the better your records, better receipts to back those up, those numbers, that all adds to a good return.
And correct me if I'm wrong, Eliot, they can audit up to 7 years back, correct?
They can go back to any time frame if there's fraud,
right?
Significant fraud.
Right.
Involved, but typically, yes, it's 7 years.
Okay, so would you remember what you bought at Lowe's 7 years ago?
I won't remember for 7 days.
Exactly. So that's why record keeping is so important.
Contemporaneous record keeping,
Correct.
Absolutely.
Yes.
That makes it so much easier for a multitude of reasons, and we're talking about if you're looking to be or qualify as a real estate professional, do you want to wait until the end of the year to try to log at least 750 hours of real estate activity? Can you keep those, can you do that? Yes, you can. But keeping those records along the way, so at least taking a monthly look at it, is highly recommended because you don't want to be in a position where you're under audit, you're trying to get a loan, or you're trying to do some other type of transaction, and you don't have those books and records, and you're, panicking, rushing, trying to get everything, trying to remember everything, going back through your calendars and date books and whatever else it is that you have, trying to put these things together. So keeping those records, books and records on a regular basis is what we highly recommend that you do. I thank you so much for joining us today. If you'd like to discuss anything with one of these two guys that we talked about here today, go ahead and give us a call and we'll schedule a consult.